Shares of Lemonade rebounding from their low of the year, closing the day up almost 4%. Shares of the low-cost insurer, known for its use of generative AI to measure risk, still down 17% over the past month. But its CEO is optimistic, particularly when it comes to AI's benefits. Daniel Schreiber is the Lemonade CEO. Daniel, welcome to Fast Money. Welcome here to the NASDAQ. Good to have you with us. How do you measure the impact Gen AI is having on your business? I mean, can you say the metric was here 6 months ago versus here today?
Yeah, absolutely. Insurance is a stunningly big business here, 11% of GDP. It's pretty nuts. And all of it at its core is about monetizing probability theory. It's really all about using data, ingesting it, making predictions. Will this person have a theft? Will this one have a car crash? So it's really the foundations of our industry. And businesses within our sector that are not built on AI are missing out on one of the most forceful technologies around. For us, it affects everything that we do. The whole company was built upon it. So it starts with managing risk. Every consumer who comes in has about 50 different machine learning models analyzing and making predictions about will they buy, will they churn, will they cross-sell, will they claim. We create a very rich lifetime value picture in real time, and that drives all of our marketing spend. About 90% of our marketing spend is driven by optimizing to those machine learning, probability theory-driven kind of predictions. And then once you're on board, the consumer experience is entirely AI. 98% of our policies are sold without any human intervention. 98% of our claims, the first notice of loss, is taken without any human intervention. And 50% of the time, the claim is paid without any humans. About a third of all inquiries, whether via email, SMS, or through the app, are answered through generative AI. So this transforms everything from the risk management piece to the cost to serve piece, to the user experience.
Do your premiums or what you charge customers for various policies change according to what the machine predicts about that consumer's behavior in the future? For instance, you mentioned cross-sell. If the machine finds that the consumer is likely to buy another policy, maybe a pet policy or another property insurance, will you reduce the initial premium to capture that stream of revenue?
In places where we're allowed to do that from a regulatory point of view, yes. And in Europe, for example, we operate in Germany and France and Holland and the UK. They're much more allowing of that kind of dynamic pricing. In the US, much less so, but we can guide where we spend the incremental dollar to where we think we'll get the best bang for the buck. And that does use those machine learning predictions.
Reported the first quarter, this is my big takeaway. Cash flow profitability projects to be net cash flow positive by the end of this year, which I thought was a huge deal. But the stock doesn't seem to be reacting to it. Is it as big a deal as I think?
I think so. We IPO'd some 4 years ago. We've 5x'd our business since then, 15x'd our gross profit since then. This is a business that's really driving on every metric: gross profit, top line, bottom line, profitability, cash flow. It's all green lights everywhere. The stock market will notice that sooner or later. The mega stocks sucking a lot of the oxygen out of the air. But the fundamentals of the business, 15 quarters in, we have beat and raised 15 times. I think we're on the right track.
And back to the dynamic around AI, and I guess what we hear, it sounds like not only is it critical, but it's really been a game changer. When did suddenly companies? We hear about AI, we see the performance of NVIDIA, but it's not as if you just flipped the switch last year either. So I'm curious of that. But bring that more to strategic thinking in terms of the growth of your company and where you are disrupting and where there actually might be people out there that, you're not going to ever talk about M&A, but you can talk about the concept of where you think actually the bigger players in the insurance space are not as nimble as you and might be very interested in what you do.
I think they are, and we've been acquiring rather than selling, and we hope to continue that. We're going to be approaching $1 billion of premium this year. We could 10x our business, and we plan to, and then we could 10x it again, and we still wouldn't be the largest insurance company around.